Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Jamna Auto, which can perform in the coming months. And let's understand about the business and let's understand about the charts. So, let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Jamna Auto, his small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. Also, if you can pay $100 upfront, you get 1 year access by paying for 10 months, so that's a 16% discount. And if you can't pay on Patreon, you can join the YouTube membership. You get all the benefits of Patreon, all updates of Patreon, plus you get 4 exclusive live sessions for members on every weekend. And if you want for detailed market or company talk or number of stocks you're holding, you can directly email me and we can work things out with a fee. Now about the company. Established in 1954, Jamna Auto makes auto components and they boast of marquee clients in this segment. They are primarily into making tapered leaf and parabolic springs for commercial vehicles. And as you understand, commercial vehicle sales have improved over the last quarter or so. They have global presence with clients across Europe as well as here in India, and clients include Ashok Leyland, GM, M&M, etc. If you look at the numbers, then the market cap of the company is around 4,000 crores and sales were around 295 crores for this June quarter. September numbers are still not out versus 65 crores in FY20, and you'll understand that at that point of time there was complete shutdown in India. Profit of 19 crores versus a loss of 12 crores is very encouraging. Debt is extremely low and margins have improved significantly from last year. There's decent combined promoter and institutional holding with around 30% free float, that is 30 to 32% of the share is with the public shareholders. If you look at the performance, then stock had fallen a lot in from 2018. From the top of 2018, it has fallen a lot. It fell around 45% in just 2 months during February and March of 2020, but has over doubled in the last you can say 18 months or so. In the 12 to 18 months, it has gone up 120, 130%, has done extremely well, and currently is sitting close to the 52-week high. But on a 5 year basis, if you look at the stock, it has done very little. It has gone up something like 10-15% overall. That's just about it. So there is a lot of room for the stock to go up, lot of room for most of the auto companies and auto ancillary companies to perform. And results have improved significantly, and it looks like it is on the ground, it looks like that things are pretty good, and we are looking at very good numbers coming through in the next 2.5 years. Next 8-10 quarters could be extremely good for the auto companies. If you look at the technicals, then there's major long-term support around the 85 levels. The stock is around 100, so around 84, 85 it should sustain. Even if it falls, I think 15% probably is what we are looking at. If you want to trade short term, you can keep a stop loss at 93, and once it takes out 105, we are looking at 118, 120 on the stock. Currently the stock is around 100, so these are decent levels to even get in at these levels also. I think a breakout is expected, and we are looking at 120 over the next probably 3 to 4 months on the stock. Was weak on charts, now at 52-week high. That is the biggest plus for the stock, that people are getting into these companies, and this is just the beginning of the move in the auto component stocks. So my call is hold. If you have it, then hold on to it. Even if you have it from 110, 120 levels, just hold on to the stock. You'll just be able to make break even in a few weeks time. And if it dips to around 80, 85 level, these are good levels to probably get into. I think the cycle has turned around. It looks like that the cycle is turning around. And remember to buy, if you don't want to take risk, then get into top players like Motherson Sumi, Bosch, Endurance, etc. Those are top class companies from a long term point of view. In a 2 years time, can easily give you between 40 to 50% return. uh, it's a 3 year play, remember. 2 to 3 year should do well. No immediate reward is possible, and one thing you need to remember, that there is a possibility that a decent decline in the mid and small cap could happen in a couple of months time, from Jan Feb onwards, in January or February. So brace yourself up for that downside and only then get into the stock. So take that into consideration before getting into these mid and small cap companies. So this was my video on Jamna Auto. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it. Thanks a lot for watching.